Hello everyone, uh, welcome to another episode of Marley Traders. Today we'll be reviewing some of our assets, reviewing the markets, what happened last week, and what we're expecting this week. So starting off here with Bitcoin, as we can see, firstly start from the weekly time frame. So as you can see, this weekly candle is about to close in less than 4 hours. It's just been one bullish Jesus candle right here. So let's see how this close and what's going to happen after that. Just because we see a bullish weekly candle going like this doesn't mean that it's going to we're going to the moon yet. All right. And then if we go to the daily time frame, however, I just have to point out though, on the weekly we have broken structure. Obviously, that is anyone can see that. We have broken structure right here. A weekly structure broken right there. And on the daily, absolutely broken structure. Of course, you can't break a weekly structure without breaking daily structure, right? Uh, so now going back again to the weekly time frame, where's our next area of resistance and support or whatever you want to call it? We have this weekly bearish order block right here, which is around the 28k, 30k region right here. So we already passed the 28k mark. On a daily, we should be expecting resistance um, around this area. So we're coming into the 30k zone, psychological number, as most people will call it. So round number when it comes to institutional level, psychological number when it comes to retail and little fishes like us. So numbers like this, like 30k, is kind of significant for smart money in bank and institutions to offload, to buy, or to sell. So keep an eye on that. And on the daily time frame, yeah, again, you can see we're also coming close to that region. So we have the daily bearish order block right there. Boom, break of structure, and then we have that right there. Um, we don't really know if we're going back to all-time high. I don't even want to think that. I'm not even thinking that far. So erase that. Forget I said that. So that is what I'm looking at. But how did we get here in the first place, right? And how have we played this Marley traders? Okay, so we know this has been happening, and then we've broken structure right here to the upside. So what we did, by the way, if you haven't watched our taking levels video, please go and watch our taking levels video down below. We have how to take levels the right way, ICT way, smart money way. That is how we do. So I'm just going to give you an example of what we did with this move right here and this move right here. And we basically just apply our strategy and it works every time. So we take off the magnet. This is just an example of what happened. So initially we take a measurement of the entire range. And when you take this is our optimum trade zone. Okay, this is the optimum trade. This is what we call the OT zone. This is where it's mostly this is where it's cheaper for us to buy. So in here we have what we call BPR, balance price range, inside our optimum trade entry zone on a discount. Okay, how do you get a discount? You measure from the swing low. Now we're using a high time frame, a really high time frame, which is a daily. So anything below the 50 or the 0.5, this is considered cheap for the algorithm that wants to buy. This is how smart money buys. This is smart money buying right here. So the dip down below 50% and it falls into, or rather it fell into our optimum trade entry zone right here around the 19k 19.8 mark. So put a rectangle there. We have We take this off and we take this off. So we already know that we are in discount and we have a balanced price range, everything lining up right here. So this already tells us that we have a good buy. And if you look back, you could see some breaker block here. So that was our initial buy, and then we had this. We applied the exact same principle. Basically, what I did here, me and my crew, what we did here, this was very straightforward, very straightforward. This was an old swing high broken. So this becomes a breaker right here. So it was a retest of the breaker, and if you take from here to here, it was without a doubt already deep in discount. So we again back in discount. We traded into a BC. We traded into this fair value gap right here. And if we look back, this is an old order block. So we have to look at the nesting effect of these zones. So we took this up. I exited first TP here, then exited here. Of course, it still went higher. Some of my homies exited right here. I don't know, but I just got these two moves here and then terminus. So first TP was internal liquidity right here, and then external liquidity. That was my terminus. So that is how we took that. Now, this that happened recently though, this right here. So basically, as always, we take our levels and we're watching what's going to happen. So I noticed again a break of structure here. Excuse my line not being straight. At least you get the point. So we broke a structure here. Now some people will say because the candle didn't close above this that it is not a structure break. I've explained this in my previous video. Once you break, even if it's just a tiny wick, it is a break of structure. However, the validity or the veracity of that move, how vicious was it? That is what is most important. If you go to a lower time frame, you would appreciate that this was a little bit more violent, right? So in my opinion, this was a violent move, but of course it was quickly sold back into the range, into here. Okay, so after identify the break of structure, a bullish break of structure. Now what do we have there? We have a fair value gap here. So I marked out this. I marked out my mitigation block first, and then here. Right there. Also, so I'm keeping an eye on everything that is happening on the chart. So right here, break of structure. Again, so this was the first one and this was the second one. So when this happened, I was waiting for price to come back into this zone to see if I can catch a good scalp long. And lo and behold, that is exactly what happened. So I have this breaker right here. It's a high, a low, a higher high, break of structure, and a retest into that zone. And again, another thing that we had here was this fair value gap. So if you look closely, this candle tapping below the structure, coming back low into this fair value gap, this tiny wick in here, this is what we call IOFED, institutional order flow entry drill. So when that happened on the daily time frame, that already signaled to me that this thing is primed to go higher. So that little wick is very important. If you know how to read price action, You know how to read these things, you know how to position yourself for this type of move, so you don't always miss out and say, oh, okay, I didn't see anything that indicated that we're going to go higher. They were little signs if you just know what to read, how to read it, when and where to read them. For example, this right there. Okay, so we go now to this was the 24k entry that we some of us are still sitting on. I still have a little position left. I'm waiting for the 30k zone. So now we go to the 1 hour time frame and see how that played out. So as this was happening, we were waiting. By the way, I usually have my chart on 4 or 6, depending on your how many monitors you have. If you trade in multiple assets, so if you have it on 4, then you can have one time frame on each, so you can see what is happening. So you can see what is happening on chart every time, so you don't have to always skip between. Okay, so on my other monitor, I was watching what was happening exactly around here on the 1 hour time frame. On the 1 hour time frame, we could see what we call ICT named PO3 power of 3. So I saw here, you have to remember one thing: before any aggressive move, there's always a liquidity grab, either to the upside or to the downside, sometimes to both sides, and then you confuse, you don't know which way to go. And if you're ill positioned, meaning if you position yourself wrongly, or if you were not properly positioned, you could think, oh, we're going up, and then you long, and then you're taking out. Oh, we're going, then you jump in again, you say, oh, we're going down, and then you go taken out again, and then you just keep. This is called whipsawing. So in a situation like this, I do not trade. Trust me, I do not trade, not because I don't know what will happen. I know exactly what will happen. That is why I stay out. This is the area where I usually get wrecked. When I mean get wrecked, get stopped out. Doesn't mean I lose my account. That hasn't happened yet. Hopefully it will never happen. Um, so right here, I saw this accumulation on the 1 hour time frame. I was watching this, and I know there was liquidity resting below here. And if I am hoping for an up price up to this zone, higher prices, I knew this liquidity is highly likely to be pushed. So as soon as this happened, this wasn't aggressive. This wasn't too aggressive. So they came back here, take out all this SI liquidity, and then it moved. Now after taking this SI liquidity, I'm thinking it's gonna go here. Let's go back to the 4 hour. So where is buy side resting? And okay, first of all, it's gonna likely come up here. Okay, so why this was happening? Why this was happening on the 1 hour time frame? I was looking for a way to enter. So when you see this happen, another break of structure right here. Though it's slightly, most people wouldn't consider this because it's mostly relative, equal highs, if you like. However, if you go to a lower time frame, you will find some good entry. That's where you refine your entry. I use the 15 minutes, 5 minutes, basically, for my Bitcoin and crypto entry. So this is how we play this to the upside. And again, you could have entered here if you know what you were doing. But just like most people right now, it's probably not a good time to enter. Instead, what we're looking for a short. Okay. So again, and if we go here to the 15 minutes time frame, another confluence that we found here was this order block, this old 15 minutes order block that has been initially tapped. So this was acting as a support for price to move higher. The algorithm knows exactly where to go and what to do when it gets there. So I noticed this order block, so it added my confidence. So like I said before, 15 minutes and 5 minutes. If I find a good set up here on the 5 minutes, then I will enter. Sorry, on the 15 minutes, and I don't need to go to the lower time frame. So this is where my initial entry was when I saw this, and then I put my stop around here, and then when we got up here, we broke this, and then entered again. I added to my position. So that is how I played the Bitcoin for now. The same principle was applied to the AVAX trade. This, just like Bitcoin, I always like to measure to see. So if I take the highest swing point, as you can see, it falls into my OT, but this range is high. This is a very big range. And even if you take the lowest, or rather a lower one, it still falls in there. However, the whole setup started from here, identifying my levels. This was both a break of structure, a bullish break of structure, and a mitigation. A breaker. So once a swing high, especially on a higher time frame like this, is broken to the upside or to the downside, a retest of it, which this is now acting as a breaker. In this case, a bullish breaker. Okay. So here on the daily, I identified. Sorry, that's a weekly. Here on the daily, I identified my breaker and a fair value gap. So as you can see, here is the fair value gap, and we tap into it, and again, just like it was a weekly OT, we also had a daily OT. So it's the same thing. All these things is fractal, as you probably already know. What is happening in the higher time frame is happening. If you go to the lowest time frame, like 15 minutes or even 5 minutes, you'll find a similar pattern. So once we came down here, of course, we're already in deep discount. So every time price is below the 50% in here, you are in deep discount, or rather you are in discount. Okay, and price is likely gonna go up. If it's up here, then you are in premium. Okay, meaning that it is expensive. So we try not to long or buy from here. We're looking for a buy down there. So price came in here, and then going to the 4-hour time frame. So the first thing we did was we look all the way to this stop, see where price has been coming from. Now on a 4-hour time frame, you can see a clear market structure shift right here. To me, you see this long Jesus candle right here. This is what we call smart money sponsorship. So we want to see displacement. Displacement is when you see an energetic move. It doesn't have to be one candle. It can be a couple of candles, consecutive candles. So like this, you could say, okay, it is a displacement, although it happens in kind of a weird way. But this was energetic. This just basically spoke to me and said, okay, the big pants are in the game right now. Okay, so what do we do at Marley Traders? We do exactly, or at least similar to what the smart money guys are doing. So break of structure, institutional sponsorship, which is this displacement right here. And we do what we do best. Price inside the OT. And we define our entry. Again, there's a high, a low, a high, a high. If you go to a lower time frame, This is fair value gap right here. Tiny wick into it, and then we took our long. Of course, this was refined in a much slower 15 minutes and 5 minutes. I'm just giving you an example of what we do, how we usually take our levels, and what we do with it. So that is for the crypto. We applied the same principle to a lot of other altcoins around here. So these are our top altcoins that we trade. Bitcoin, these ones, and then main alts that we trade. And then if you go to the other way, we have shitcoins. Some of them might be useful. I don't know. We just trade them, make money out of it. So we apply the same principle to all the pairs that we trade. And going to the legacy market. So what happened here was for Russo. What happened with Russo was just a second. Let me start from the daily time frame. So we broke structure right here. If you remember what I said about displacement and breaking structure and smart money involvement, this is exact same thing. So how does this work really? When you see a move like this, displacement, this big candle, this means the big money is in the game. They broke this low and price is around here, then it's not just going to continue like that, at least, especially when this is a daily candle. So what we did, we want to identify, when we saw this consolidation around here, we wanted to identify the next move, what's likely to happen. So take this again, my favorite tools, one of my favorite tools, right here. This was my order block. So above this 50%, we're in premium. So what are we looking for? Because first of all, because we know we have shifted structure to the bearish side, so we know what we'll be looking for is sell. So price went back up here into the premium zone, into our order block, and to refill this gap, this imbalance that's here, from here to here is an imbalance which was half filled before, and then it was just consolidating in between that. So the first thing to do in a situation like this is you identify your premium and discount PDRAs, that is PDAs. So we identify a fair value gap and another block on a higher time frame, which is the daily. Okay, so and we measured from here to here to get the discount and the premium zone. And then you move to the 4-hour. Oh, by the way, I probably should keep this on just so you can follow. By the way, guys, if you like what we produce, if you like what we doing here, please like and subscribe. This is a new channel, just help us grow. And if you want to learn more how we use this concept, you just come down to our Discord. I put my levels there and I walk people through it every day, and you just DM me, or I'm providing one-on-one service, mentorship for free. Everything is for free. ICT gave us this gift, or rather gave me this gift for free. So the least I could do to thank him is share the same, extend the same thing to other people. Okay, so I keep this just so you know we are in discount and we're in discount and then we're in premium. So first of all, we identify these two areas and then we go to the 4 hour time frame. Remember, this was the daily order block right here. So here, what do we see? We had a high, a low, a lower high, and then a break of that lower high. Oh, how can we read this? Well, this is the opposite of a breaker block, which is a breaker block will normally give you a higher high before the break. But this, the difference between a mitigation block and a breaker block is a mitigation block does not need to take out the prior high. So, and here is it is. Here. And we had this tiny, I don't know if I should call it order block. Some people would call this another block because of this. It was the last tiny up close candle. I wouldn't call it that. I wouldn't. However, now that we're here, and if you go to the 1 hour time frame, we have an order block on the 1 hour time frame. So this is how I refined my entry. I went back, or rather down further to the 15 minutes time frame. This is where I was talking about a mitigation block. A breaker block. This is what I meant. This is actually what I meant to say. So here we had a low, a high, and then a low, a break of this. Again, what do we see here? A break of structure. This last candle right here becomes a mitigation block. Sorry, a breaker block. Excuse me, mitigation block and a breaker block usually confuse me. I may mix up the two. Uh, this a breaker block, okay? And this is a fair value gap. A fair value gap inside a breaker block. That is what we call they call in the SMC community, ICT community, they call it the unicorn entry. But this right here, this was the entry that we had right here. Okay, we entered here and then we wrote this down all the way down. Not all the way down. I didn't take it that far. I took out here and I left a tiny bit on. So you can see just by that principle, you see how far price has dumped since then on Russell 2000. This is Russell 2000 in case you don't know. Sorry about that. Should have said that in the beginning. However, regardless of the ticker or regardless of the pair, the principle is the same. That is exactly what I'm trying to show you here. So far, I haven't plotted any indicator, RSI, MACD, or any of that. This is pure price action. However, we do use, in Marley Traders, we do use our custom indicators, which is those. Okay, and for this trade, we saw that we had a weekly gap. So we're meandering around this weekly gap right here. So that was just another confluence for us. And later, to see what another entry that we had using the same principle. So again, this was another entry that we had. And this time we added our section indicator. There was a particular trade that I was, this one. Sorry. There was a particular trade. This particular trade was very, very juicy in my opinion. So we consolidated in Asia. This is a classic power of three right here. Consolidation and then manipulation and distribution. Okay, it's consolidation, accumulation, manipulation, and then distribution. So when you're consolidating, they're accumulating. So basically, I use the word interchangeably. And this happened inside the London kill zone. We traded right into NDOG, new day opening gap right here. The green one is new week opening gap. This is a new concept by ICT. So having these two indicators helped me a lot manage this trade, or rather get a closer look into this trade. And if you know, one of the things ICT I've always said, if you bearish, you have to sell around midnight open. So this was a really prime entry sell for this trade. So although US, if you live in the state, you probably don't catch this because you're still sleeping. However, if you live in Europe like us, this was a very good entry. And if you live in the state and you woke up around 8, this is the 8:30 and 9:30 entry, and then you do the same thing. You just look for premium versus a discount, and then trade into this fair value gap, and then you short. And then because you have to identify where your price is going, where price is going. Okay, so that is how we play this out for Russell. What else do we have here? Let's look at oil. Yeah, let's look at oil. Similar thing happened with oil. If you go to daily, so here what we did is this. For this move, this particular move, this is what I participated in. Yeah, we took some couple of trades this past week, inside here, but this particular one for Friday. So this is what happened. Make sure our daily, the last Thursday's high, and we were just waiting for that to be taken. We're already bearish, so we might as well be going all the way down here. Or the aim was 50% of this. If you don't know, go watch part 2 of my levels taking. You see this right here. This was what I was aiming for. The consequent encroachment of this week, this daily, this weekly week right here. This is it. And then if you go to the daily time frame, we have a daily low. So this was my first target, and this was my close target. So you see how I was using this as my internal liquidity target. So you have to, two things you have to do. You have to locate your what ICT called the low hanging fruits. So here, old daily low was my initial target, and then this was my terminus. I wasn't too crazy about going all the way here. So just so you know what we did there. So as this was happening, and also this daily low was another thing, because this low was lower, or rather higher than this. So they are relative equal. I know there's liquidity hanging under here. Okay, so this and this other daily, let me just throw it out just to be clear. Sorry, right here. So these were my two targets. Here and here were my two targets, and the consequent encroachment that I mentioned out before. However, prior to this, when the market closed, we were looking for an entry. Okay, so what did we do? If we go to a 4 hour like this, we're waiting for these highs to be breached. Like that. Again, turn this on. So you can see Asian high. We were waiting for Asian high to be taken. Accumulation, manipulation, distribution. So you can see anytime you want to get reg, it can easily happen during Asian sessions. You just have to be patient and wait. Again, what do we have here? We have a midnight open. This was a midnight open. What did ICT say? If you want to sell, if you're looking for lower prices, try to sell around the midnight opening price, just around it, slightly below or slightly above. So this midnight opening price went up, consolidated after consolidation here, and then went up and then dumped. So if you go to a lower time frame, much lower time frame, and then you can refine your entry there. There you go. So you could have entered in this after breaking structure. You could have waited for structure break here in London session. So this would have been for London traders. A break, and then trade into this fair value gap and this other block right here, and then I think this was the entry I used actually. Yeah, I think that was the entry I used. However, there were multiple entry if you go to a much lower time frame, like the 2 minutes, 1 minute, and then you could refine it further like that. So as you can see, it's a very mechanical steps that we take. The first thing to do is to identify your PDAs, and if you have access to tools like the Marley Trader Session Indicator or the gap indicator, it will aid in your analysis. You don't need it, but it just helps you refine what is what, your session and all those other stuff that might sometimes confuse you. So we came in here and bounced. So much of my positions was taken off here, and then the market closed, and that was it for oil. You have to I just have to mention that this entry model, we replicate it in our other pairs. So it's not just that. This is the main thing that we trade in Marley traders. This is the main thing. Besides crypto, as you can see, all the crypto, find setup there, we take it. We trade these features and then these commodities, and then this is our main forex FX pairs that we trade. So these ones, occasionally, if we find a setup, if we don't have anything to do, we just go and look for setups here. So that is why these ones are not highlighted, but they are there. But this is our main focus, okay? And then what happened here for the dollar? The same thing. On the daily, this was our, just have to point something out here, extra zones. Yeah. So if you don't know what these are or the importance or the relevant for these things, you just go watch our level taking videos. You understand the importance. So as price was coming into our, let me take this out just so you understand. Firstly, we had this gap right here, and inside this gap, this is what we call volume imbalance, by the way, because of the space. I think in crypto they call it CME gap or something like that. I'm not entirely sure, but when I was deep in crypto back in the days, this was one of the things that was thrown around. Oh, we have a CME gap, it needs to be filled, blah blah blah, just like this. So as you can see, there are huge gaps. They usually get filled actually. So for this one, I was actually looking for a body close above it, but this was my doll. Doll means draw on liquidity, DOL abbreviation. So if you hear me using that word doll, means draw on liquidity. So this area was my doll, draw on liquidity. Why? It has this gap, daily gap. Okay, as you can see. So daily volume imbalance. highlighted. And besides that, there is something else called IFVG. It means implied fair value gap. So you take the half point of this week. No, sorry. I was actually meant to take it down. The half point of this week, and then the half point of this week, which is around here and around here. In between that, that is what ICT called implied fair value gap. This is a new. It is just recently added to his tutoring this year, 2023 model. The same with the NDOG and NWOG, new week opening gap and new day opening gap. So as soon as we got in there, I knew something was going to happen. So we started preparing, and when I saw that he wasn't going to go further, so I thought, okay, something was going to happen. So we go to lower time frame, and then we started declining. And when we got here, what I did, I'm just showing you, taking you through some steps, what goes through my head. I marked this out. So when this happened, like I said, this becomes a breaker. Okay. As soon as this became a breaker, I knew we're going down. On the daily time frame, this is what was happening. We didn't even get into this gap. This was not the same gap I was talking about before. I just illustrated that I just said that to highlight the importance of taking levels, because you wouldn't be thinking about week. People usually don't focus on weeks. So that is why this went in there, tap in there. But for this move, this is exactly what happened. Because if you were just merely looking at the daily, you'll be thinking, okay, where is this candle going? You don't understand there are other factors at play. So when you go to the 4-hour time frame, we already bearish. This is institutional involvement. Again, like I said before, institutional candle, which I sometimes refer to as the Jesus candle. Hallelujah. Okay. And when this happened, what do you think will happen to other, what do you call it? Other pairs like Euro USD, of course. So while we were shorting the dollar, we were longing those. So NZD and shorting US CAD. Boom. So that is how we roll. We apply the same entry principle, entry pattern to all our pairs. So you come here, and then you just wait for market structure shifts or whatever entry model you want, and then you look for mitigation block, order block, breaker block, or whatever you want, or whatever you use, and then off you go. Soon I will be coming up with a video explaining all the blocks and how I use them, what they mean, and how important they are. And I try to explain these concepts very, very amicably, like very, very soft, and I use illustrations so that anybody or most people can, or rather should, understand. So that is how I played last week, and that is how I traded last week. Of course, not all of my trades with the crypto um, and legacy market, of course, not all of them play that. Nobody wins consecutively without taking a hit. But for the most part, 75 to 80% of my trade this week played out really good. And why is that? Because I know how to take my levels, and I know what to do when the price comes to my level, and I know what to look for. So as you can see on the daily time frame, we've been bearish as F. You might see this and thinking, okay, we start turning up. In my opinion, not until we break above this and start having a structural shift to the upside here, that I would think, okay, we kind of back into this range and going to 115 area. Okay. that is for that. And then lastly, for let me just see what more should I cover. Okay, let me cover gold. So gold. So what do we have? Hmm. Myself and my crew, we took this up right here. So as you can see, this week, that is this week, like not week, but this week, this week candle or last week's candle rather, because we're entering a new week right now, was very bullish. It was a full Jesus hallelujah candle going up. There is no week at all to the downside. And to me that is a little bit like okay, but it doesn't really surprise me. It doesn't really surprise me because if you look at the dollar, gold is inverse correlated with the dollar, meaning if dollar is going down, gold should be going up, and vice versa. So uh, the principle or the concept of risk on, risk off is playing right here. And if you also know what is happening in the world, you would understand why it's easy to think or believe that this is gonna go up. Okay, I think this video is getting too long now. I've analyzed a couple of things. I don't want it to be too long so people don't get too bored. But the information that we bring in here is extremely important. You just have to know how to take your levels. And if you're struggling and you can't really find proficiency or you're not proficient yet with your trading and you don't know or you still struggle with certain things, you just come to Marley Traders. Come to our Discord. We are there. This is where I hang out every day. We post setup, rather I post levels. I don't give you signals. It's not a signal providing service. I offer one-on-one mentorship for free for anybody that wants it. So we refine and help your strategy and help you frame your own and become an independent trader. Okay, please like, subscribe, and share this video and help us grow. We team everybody. What I mean by team everybody is we're trying to help people grow their trading career. All right, guys, thanks for watching, and see you again in the next one. Bye.